Okay, well, good afternoon, everyone. I'm Martin Whybrow, IBS Intelligence. I thought I was going to have one major challenge this afternoon, which was talking for 10 minutes on core banking system trends. Having now sat here for the last couple of hours, I realise another challenge is such a tough act to follow, actually. I've been fascinated by the first two sessions. I'm standing here with one hat on today. I'm going to be talking to you about a few of the trends in the core banking market, maybe touch on how the existing systems could potentially match the new models that we've been hearing about today, and also sort of look forwards as to sort of where new platforms might be coming from and where the market might be evolving. But like everybody else, I've got multiple hats. So I'm sort of sitting there in the audience listening as someone who's very actively involved in a transition town, for instance, and quite a lot of the things that I was hearing up here about the social inclusion, some of these great new entities that are coming out fit very well with that movement, if anyone's aware of it. It's a sort of major international phenomenon, the transition movement. And secondly, as of 2 Mays ago, 13 months ago, I became a Kent County Councillor as well. So I have 2 or 3 day jobs, but again, with my local authority hat on, I'm very much looking forward to having a chat to see what has been done with the credit union in London, because in Kent we are a sort of void of building societies or credit unions or that sort of mutual financial option. So very interesting couple of sessions. I'm going to just whistle through with my IBS hat on rather than any of the others. I could talk about potholes or social care, but I'll talk about core banking systems. At the end of the day, whatever the new models that are coming along, the market is pretty populated primarily with some, shall we say, pretty long-standing banking systems. A lot of the technology that underpins today's market has got roots of 20, 25 years. There is a question really as to how or whether they can adapt to the new models or not. So I'll have a look at that in a moment. But this slide is really about what is going on in the core banking system sector itself. IBS is particularly well known for our annual snapshot that we do, which is the sales league table. And we're probably the sort of market barometer for the state of the market. Now, one of the problems that all suppliers have had is this long fallow period. There is absolutely no doubt that the number of banks, whether established, whether newcomers, selecting core platforms has fallen dramatically over the last few years. And unfortunately, 2013, as you can see from these figures, was another very grim year for the suppliers. And I think that has clear implications for the buyer community. It's not only the quantity of banks that are selecting new platforms, it's also been the quality, if you like. Pre-financial crisis, here in the UK, for instance, you had the sort of tier 2, upper tier 3 banks starting to go through big transformation projects, starting to finally drag themselves into the modern age, starting to try and replace these legacy systems. But that pretty much stopped. Quite a few of the projects carried on, but banks embarking on that journey really came to a grinding halt, not only in the UK but elsewhere. There's still investment, but it's tended to be around the edges rather than at the core. And there is a debate to be had about the extent to which you can really move forwards by adding on more satellite systems, by putting on some more sticky tape, by doing whatever it needs to meet the latest regulations on an ad hoc basis rather than looking strategically, looking at the bigger transformation. One of the main implications for the buyer side of the market, which I think is bad news for anybody that's a new entrant or would be new entrant, as well as for the established players, is that this has had a further effect of diminishing the amount of choice that is out there. Particularly mergers and acquisitions have continued apace, and this has taken out of the market a number of very strong, traditionally focused, autonomous suppliers. So if you take just, say, the treasury and capital markets space, you've had a big grouping of systems under SunGard, under MISIS, under Wall Street Systems. And at the end of the day, that is pretty bad news, I would argue, for the buyers themselves, because it does add up to a lack of choice. These previously strong autonomous companies tend to go into a bit of free fall. They lose the focus. And at the end of the day, where you might have compared 3 or 4 systems from 3 or 4 suppliers, if they are all under one roof, you are only going to get one of those systems to choose from. So we get involved in quite a lot of consultancy work. We've been around in the market for 21 years. We focus on the core banking systems market. So reactively, we started to help banks when they came to us, and we found that we were doing consultancy without meaning to. But a lot of the time, we can predict the shortlist of just about any bank, really, because although the market can still look from the outside to be fairly well populated, when you actually boil it down, it is very categorized, and it is very much the case that if, say, you are looking for a relatively high-end retail banking system, you're probably going to be picking from 2 or 3. So there's also the sort of demand and supply question when you're looking at how depressed the market is. We certainly see quite a lot of banks that from time to time raise their head above the parapet. They have a look around at the market. They have a look at replacing their legacy systems that maybe are 25 years old. They actually find that the bulk of the systems on the market are that old. Now, the suppliers would argue that that's 25 years of pretty continuous R&D, that there's been a lot of investment in those systems, but fundamentally the architectures, quite a lot of the technology sometimes is as old as the legacy systems that banks are looking to replace. And so those banks tend to put their head down again, leave it a few more years, up they pop again, have another look, are fairly underwhelmed, and nothing really happens. To what extent are the existing systems on the market appropriate for the new models that we've been hearing about this afternoon? I think certainly if you look, say, at the peer-to-peer space, quite a lot of the early peer-to-peer companies decided that they would build platforms themselves. So there's been quite a lot of in-house development there. Some of those peer-to-peer players have also then concluded that those platforms that they've bought might be an income stream themselves. So you've got some of those taking their technology platforms to market. At the same time, if you sort of take a point solution for the business that you launch on day one, and that proves to be too narrow and too inhibitive, then you might well be restricting your growth going forwards. And this is sort of the play of the broader core banking system suppliers when they are talking to the new entrants to say, well, don't sort of restrict yourself, take these couple of modules now, and as you grow, as you expand, you may not know which direction you're heading in, we will be able to accommodate that growth. I think to a degree that argument doesn't really hold water. A lot of those systems are very heavy to implement. I think it's a major problem for new entrants. They don't want to go through a sort of 6-month implementation, which is with a good following wind as a greenfield site. The investment is very prohibitive, and also, these core banking systems do have a reputation for being pretty hard to put in, even into some of the greenfield sites. The track record is not great. So we're then looking at, well, where are the new solutions coming from? They might be coming from sort of regional suppliers, maybe a bit like Profile, that move into new territories. They might also come from below. There are a few new suppliers, particularly with a cloud-based model, that are starting to provide quite innovative systems at the bottom end of the market. I think the place we won't be looking probably is with the existing suppliers, because time and time again, history says that the existing suppliers are not good at building new platforms. It might be a group of people who leave a supplier, go and set up another company and build a new platform, but we're not particularly looking at the incumbent suppliers for the new platforms. This is just our analysis of what's going on from a geographical point of view, and the only reason I put this up was to throw a little bit of ray of sunshine into the proceedings. This is new name sales of core banking systems 2013 compared with 2012, and you can see that yet again it was a year of pretty depressed markets. Now that's comparing a pretty depressed year 2012 with 2013. If you took that bar chart out to say 2008, that would look really grim. The market has shrunk in terms of new selections by about half. So it's been a really tough market for suppliers, and that's one reason why you've had this consolidation. But there is a bit of a pickup in Western Europe, which has been a really quiet market over the last few years. I also think that there's possibly a bit of a time lag here. I think there were probably quite a lot of selections starting in 2013 which weren't signed, and so I think we're probably at the bottom of the U would be my best guess. Just a slide on the UK market. It's been interesting to see these new entrants arrive in the UK market and then look at what systems they have chosen. Now, if you were looking at this sector not sort of really with any preconceived ideas, you would suspect that the new entrants would go for leading-edge technology. However, pretty much without fail, these new banks have gone with the tried, the tested, the 20-year-old systems rather than looking to push the boat out. And I think there's an interesting debate to be had around that. I think it is almost certainly a number of factors. One might be actually regulatory. The regulators might be a lot more satisfied if you are coming to them with a proposition that includes a system that is installed in 20 sites in the UK, rather than saying, hey, look, I've got this cloud-based system, it's brand new, could we have a license? Secondly, a lot of the entrants are staffed by people who have worked in other banks. And so they bring across their knowledge of processes and their knowledge of systems, and quite often that is the direction they head. Very interesting to hear Metrobank talk about potentially refresh its technology after 5 years. It was one of those banks, along with Tesco's, along with Sainsbury's, along with Aldermore, that went with one of the really established core platforms. There is activity in the UK market amongst the smaller banks. This has been something over the last 12 months that's been quite interesting. There has started to be a replacement market in the UK. It's been a more active market in the last 12 months than it has been in probably the last 5 or 6 12-month period. You've certainly started to see some replacement of the Bankmaster system, which is now owned by MySys. It's one of the stalwarts of the UK market. But 4 or 5 smaller banks have decided to replace that over the last 12 months or so. Building societies, not a lot of sign of life there, but there's been a few of them that have been sort of forced into a corner because their supplier has basically decided to sunset their system. And so there's been a little bit of chopping and changing there, but still waiting for any great signs of life down there. And unfortunately, the market continues to be dogged by high-profile failures. Cooperative obviously had a bunch of problems, but a very major, very expensive failed core banking system was one of them, although it did rather pale into insignificance against some of the other problems they then hit. And we see it actually increasingly making national headlines now. These big banks in the UK are running on ever more fragile systems. You touch a bit there, it fails there. The public know about it, and it makes the headlines. So I think the drivers haven't gone away during this tough period. They've become ever worse. The COBOL programmers have retired in ever bigger numbers, and it becomes less and less tenable. So there will come a tipping point, I think. So where do we go from here? Well, the market definitely needs new systems. We've been talking about high barriers of entry for someone who wants to set up a bank, but there's a blooming high barrier of entry to someone who wants to come along and compete with a Temenos or an Oracle with a core banking system. They take years to build, which is why you get very few coming onto the market, whereas you get more dropping out of the market, basically. More and more of the business is in the hands of a very small and smaller number of suppliers. I think that probably, just to leave sort of where we're heading, I get asked quite a lot, what's your prediction for the market? But the conclusion definitely is that the market, or the appetite of banks to go through big transformation projects to replace their core systems, is very heavily tied to the economic conditions. So that makes it very difficult to make real hard, firm predictions, because that is a big unknown. If the economy continues to show signs of growth, if confidence builds, then I think that is the thing at the end of the day which will really pick up the selections. And maybe the new entrants will also be a spur, because if we boil it down to why at the end of the day does a bank finally select a core banking system and enter into one of these hugely expensive, hugely risky projects, it is probably because they are worried about losing competitiveness in the market. And that comes in different forms. If one of their peers goes through one of those projects and comes out the other side and looks as though they're going to get competitive advantage, which might be the case with, say, a Nationwide, that doesn't half focus the minds of other banks. And banks have this tendency to behave like sheep, or, if you were putting it politely, peer pressure. The idea that one of their number is going to pull away and become more competitive is maybe even more frightening than the idea that there's this bunch of new entrants who are going to come in and disrupt their business model. So I realise we're running behind time, so I'm going to just leave it there, but very happy to obviously take questions afterwards.